Okay, all right, that's the global market action. How will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. A lot to catch up on, right? Rima, so tell us what are the cues we are watching out for in today's trading session?
Well, for starters, the SGX Nifty is suggesting a slightly negative start to begin trade with, taking cues from Wall Street. Wall Street on Friday ended with minor cuts, but the S&P 500 lower for the second consecutive week. The consumer sentiment data was disappointing. It fell sharply to a 6-month low of 57.7 in the month of May. This is much lower than the April number of 63.5 and well below what the consensus estimates were. Separately, Congress has won the Karnataka elections. This, the sweep, the extent of the win came in as a bit of a surprise. So maybe the markets are a tad bit disappointed. CPI inflation, on the other hand, was the other macroeconomic indicator, came out on Friday post-market hours at 4.7% in the month of April. This is the lowest that we've seen in the last 18 months. Back to our own markets in terms of cues, the FIs bought in the cash for the 12th consecutive day on Friday. They bought more than 1,000 crore in the cash market, while the DII sold 922 crore. Results over the weekend and on Friday post-market hours that the Indian markets will react to were pretty okay. Tata Motors was good, Colgate, Avenue Supermarts. No major disappointment on the earnings front. But this week, the street will track numbers from Bharti, ITC, State Bank of India, which come out on Thursday. On Friday, JSW Steel, NTPC, Power Grid. And on Saturday, we've got Divi's Laboratory. Back to you.
Okay, all right, Rima, thank you so much for that. So a lot of numbers which are expected. So those stocks will be in focus, but of course, the other ones as well. Surbi has that list. Good morning, Surbi.
Hi, good morning. So a whole host of numbers that have come over the weekend. Let's start with IGL. The revenues were flat sequentially. The EBITDA was up 9%. The operating margins did improve but was lower than what was expected. The operating margins came in at 12.6% versus expectations of 13.8%. Avenue Supermarts, the revenue was up 21%. The EBITDA was up 4.4% and the margins came in at 7.3%. Max Financials, the VNB margins were lower on a year-on-year basis. The APE growth was supported by higher share of non-par savings products. Next is Naveen Fluorine. It was a strong set. The revenue was up 70%. The EBITDA was up 114%. And the operating margins came in at 29% versus 23% same time last year. AMI Organics, again, a very strong set of numbers. The revenue was up 30%. EBITDA was up 58%. And margins came in at 22% versus 18%. DLF, the bookings were at a record high of 8,458 crores. The collections were again at a record high of 1,929 crores and it generated a cash of 1,369 crores. And lastly, Adani Enterprises Board approves a fundraise of 12,500 crores via a QIP.
Okay, all right, a lot of stocks right in focus. Thank you, Surbi, for that list. Finally, let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. You know, the FIs, they continue to buy. However, the quantum has come down a little bit. And if you look at the FI and the DI data together, I look at that together and it's a net institutional flows. That's a tenth of what we are seeing on an average in the last 10 days or so. That number is less than 100 crores. So just keep an eye out on that factor. From the F&O cues that we have, the premium on the Nifty came down sharply to around 20 points in comparison to nearly around 50 points out. So the worry was, is there some big shorting that's happening out there? But it appears there was more amount of unwinding because the Nifty Bank, both of them did see some unwinding. The FIs as well, they unwound both longs as well as short positioning. They continue to remain net short with around 54% of their positions on the short side. On the option side, they bought both calls as well as puts. But on the writing side, they're still writing more puts than calls. Now, that's giving you a sense that maybe at lower levels, things will get protected. And the options data as well, 18,200, 18,000 put. Well, between them, they added close to around 50 lakh shares or thereabouts. So that's telling you that maybe at lower levels, we have some bit of a near-term base or near-term stop loss that we can look at. On the upside, though, 18,400, the bears, they want to come and fight for that. Even last week, we saw the Nifty attempted to go to that mark, but it is selling pressure did come in. So the Nifty, the levels we're tracking, 18,100, 18,150. Risk reward could favor the bulls closer to these levels. So you're seeing a 30-40 point downtick on the SGX Nifty. If you get a little wider gap down, that will be better from a bullish perspective actually because it's giving you an opportunity to get in. And the Nifty Bank, that's been in a world of its own in fine form. The stop loss out there is around 43,300. Till that level holds out, you'll pretty much think that yes, the uptrend is intact. So let's see how this goes. For starters though, SGX Nifty suggesting some red. Back to you.
Okay, all right, Nigel, Surbi and Reema, thank you so much for joining us and prepping us up for this trading day ahead.